few options for your YouTube video intro. Choose the one that best fits your style. Option 1, Direct and Engaging. Hey Forex traders! Welcome back to Forex Scope, your go-to for sharp Forex analysis. Today, we're diving deep into EURJPY, breaking down the 15-minute and 1-minute charts to pinpoint those crucial buy and sell opportunities. If you're ready to navigate the markets with confidence, hit that subscribe button and let's get started. Option 2, Friendly and Enthusiastic. What's up, Forex Scope family? It's your favorite analyst here, and I'm super excited to bring you a fresh look at EURJPY. We're going to dissect the 15-minute and 1-minute charts, uncover potential trends, and give you the insights you need to trade smart. Don't forget to subscribe so you don't miss out on any of our market updates. Option 3, Concise and Action-Oriented. Welcome to Forex Scope. In this video, we're focusing on EURJPY, examining both the 15-minute and 1-minute timeframes for clear signals and future price direction. If you want to stay ahead of the curve in the Forex market, make sure you're subscribed. Let's jump right into the analysis. Option 4, slightly more formal, but still friendly. Greetings, fellow Forex enthusiasts. This is Forex Scope, bringing you our latest market insights. Today's focus is EURJPY, with a detailed analysis on the 15-minute and 1-minute charts to identify upcoming price movements and potential trading signals. If you value informed trading decisions, please consider subscribing to our channel. Let's begin. The resistance zone is identified between the price of 177.506 and 177.595, spanning from the candle starting at timestamp 176.252.4900 to the candle ending at timestamp 176.252.5800. This area shows significant price congestion and multiple attempts by the price to move higher, indicated by the highs of the candles within this range. The upper Bollinger Band also resides within this vicinity for a few candles, suggesting potential selling pressure or consolidation at these elevated levels. The price struggled to break decisively above this zone, forming bearish wicks on some candles and indicating that sellers were actively defending this price area. The relatively close proximity of several candle highs to each other in this range points to a strong historical battleground where upward momentum faltered. The presence of a substantial bearish candle, close at 177.336, low at 177.197, immediately following the peak within this zone further reinforces its significance as a resistance. This cluster of price action highlights a period where the market hesitated and eventually reversed, marking it as a key level for potential future price reactions. The support zone is identified between the price of 176.614 and 176.711, spanning from the candle starting at timestamp 176.244.4800 to the candle ending at timestamp 176.244.7500. This region exhibits a clear accumulation of price action, with multiple candles showing indecision and attempts to find a floor. The lower Bollinger Band also approaches this area, suggesting a potential bounce or stabilization point. Within this range, we observe candles with significant lower shadows, indicating that buyers stepped in to prevent further price declines, creating a visible floor at these levels. The price also experienced a period of sideways movement or slight accumulation just above this zone before attempting to move higher, signifying a battle between buyers and sellers where buyers eventually gained control. The presence of several candles with large bodies and significant lower wicks demonstrates a strong demand at these price levels. This area acted as a crucial turning point, preventing a steeper sell-off and marking a level where buying interest consistently emerged, making it a robust support. The support zone is identified between 177.342 and 177.305, encompassing the period from November 7, 2025, 1914, timestamp 176.254.2840, to November 7, 2025, 1917, timestamp 176.254.3020. Within this time frame, the highest price recorded was 177.325 and the lowest was 177.304. This zone is considered significant due to multiple price interactions, exhibiting characteristics of price consolidation and retesting. The presence of several candles with relatively small bodies and extended wicks suggests indecision and potential buying pressure from levels around the lower boundary of this zone. The price repeatedly tested the vicinity of 177.310 to 177.320, indicating that this price range acted as a floor, preventing further significant downward movement during this observation period. The multiple touches and the subsequent bounces from this area demonstrate its strength as a support level, reflecting a balance between supply and demand where buyers stepped in to absorb selling pressure. This repeated interaction highlights the significance of this price area as a potential turning point for future price action. The resistance zone is established between 177.464 and 177.472, covering the period from November 7, 2025, 1939, timestamp 176-254-4340, to November 7, 2025, 1941, timestamp 176-254-4460. During this interval, the highest price observed was 177.499 and the lowest price was 177.447. This resistance area is identified by a notable price spike and subsequent pullback, indicating strong selling pressure encountered at these higher levels. The candles within this range show significant upward movement followed by a reversal, with the upper wicks of the candles reflecting the rejection of higher prices. The rapid ascent to this price area and the subsequent struggle to maintain those levels suggest that sellers were actively defending this range, pushing the price back down. This repeated test and rejection signifies that it was a level where supply outweighed demand, creating a ceiling for the price. The presence of significant price action within this narrow range, including the interaction with the upper Bollinger Band in some instances, reinforces its role as a strong resistance level, potentially acting as a barrier to further upward momentum. The current price action for EURJPY on the 1-minute timeframe shows a potential for a short-term bearish correction following a period of consolidation near the 177.400 mark. The previous resistance at 177.464 to 177.472 proved to be a significant barrier, leading to a price retreat. The proximity of the current price to the lower Bollinger Band, 177.353, also suggests a short-term downside pressure. We can observe a potential zigzag pattern forming with initial drops to 177.380 and 177.362, indicating sellers are attempting to push the price lower. However, the historical support at 177.342 to 177.305 remains a critical level, and a rebound from this area is anticipated, bringing the price back up towards 177.390. This rebound could be a temporary retracement before a further decline, or a precursor to a more significant upward move if buyer strength is re-established. The Fibonacci levels at 177.406 and 177.506, with the latter being higher, indicate a potential upward trend is still in play, but the immediate price action suggests a short-term correction before any substantial upward movement can be sustained. The interplay between the lower Bollinger Band, the identified support, and the observed price drops suggests a cautious approach, with a potential bounce from the support zone as the next logical move before further price discovery.